Alexander George Muthoot joined MD at Muthoot Finance after company's Q3 numbers. Listen into that conversation as well.
When we started this financial year, we gave a guidance of about 15%. We crossed that in the first 6 months itself.
Yes.
And quarter three, now we stand at about 29% growth. We're expecting good growth in quarter four, but I cannot give you a specific number what it would be like. But we are expecting good growth in quarter four, primarily because we are doing a lot of good new acquisition strategies to expand the category in the gold financing space. We've all, done a lot of things on the marketing front, on the digital front, and that has been testimony to all the new customers that we've added. Almost 13 lakh 70,178 customers, and to the tune of 15,723 crores have been dispersed. So our new customer acquisition strategy thrust remains. At the moment, with a loan book of more than 1,11,308 crores, we would give a estimate in financial year 26 of 15%. The book is large. The entire loan AUM has grown significantly. So as of now, we'll give a 15% guidance. We will definitely review it as the quarters progress and take a stance of if we need to revise it further.
Interesting one. So leaving it open to revision. So I'll change the texture of the question. What's leading to the kind of growth that you're seeing? On the one hand, you have the regulatory measures which are likely aiding you. The other side is asset quality also, where you've had steady asset quality, no real increase or spikes that we've seen, and therefore in terms of growth, what's driving the growth is what I'm trying to understand from you. Is it you taking market share from others? Is it new geographies? Is it new customers? What are existing customers doing? Are they topping up their loans given that gold prices have gone up? Just give us that perspective.
Okay. As a category leader in the gold financing space, we've always looked at expansion of category. So with our huge branch network of over 7,000 plus branches, we always build an operational efficiency into our branch ecosystem. This year, our gold loan AUM per branch stands at 19.15 crores, which is up by almost 5 crores per branch across such a large distribution network. It's primarily because as a category leader, we believe to expand the category. And for expanding the category, we do a lot of marketing initiatives, which is building on the attitudinal transformation. India today has 25,000 tons of gold. Around only 1,500 to 2,000 tons has been monetized in the financial services sector, in the formal sector. So we, as a category leader, look at unlocking this dead asset and putting it to productive use. So to do that, a lot of educative series campaigns, attitudinal transformation campaigns, on-ground connect with the customers, catchment area activities with the customers in the branches is what our thrust is. It's not only about taking market share from each other, but it is about category expansion as a whole, which Muthoot Finance has always been doing and leading from the front. And that is where our thrust is. Like I said, the new customer acquisitions that we have done this year is a testimony to all the category leadership and category expansion initiatives that we have done on the digital ecosystem, on the branch network productivity, on the new customer acquisition strategy. So that is a thrust that we always have and will continue to do so because we feel there is a huge opportunity for the category itself to expand.
Okay. Talk to us about the other big moving part now, the 25 basis point cut on the repo. What impact does that have on your margins and how quickly?
So our NIMs currently is about 11.57%. We are expecting the NIMs to be around in the range of 11 to 12% itself. There has been a rate cut. So a few banks have passed it on, but we are expecting our NIMs to be around the 11 to 12% itself.
Okay. So how much would you pass on therefore?
It all depends, I think RBI has cut it by 25 basis points and, a rate cut for the gold demand, it is definitely going to benefit. And we always pass on these benefits to our customers. We're highly competitive in our interest rates that we pass on to the customers. And that's primarily the trust that they have in the brand, the kind of products and services that we offer at very competitive rates. We always give that benefit to the customer. So it all depends on what the cost of funds, how much it will reduce from the banks towards us, and then how much of that we pass on.
Okay. So on the other portion of your loan book, you have home finance, you have Muthoot Money, both of those growing at a very, very healthy clip. What's the thought process behind both of these verticals? Do you continue to grow them and scale them at the kind of clip you are, because you're well and you're adequately capitalized? So what's just the thought process behind these two verticals?
So our thrust, apart from our gold loan business, is to increase the contribution of our non-gold loan business by about 15 to 20% of the entire loan loan portfolio. We want to become a financial services conglomerate, and we deal with almost 2.5 lakh customers coming to us every single day. So there's a huge opportunity for us to cross-sell to these customers also, who have various diversified financial services needs. So these segments of financing, whether it's the personal loans, affordable housing loans, the Muthoot Money, which we have now converted from a vehicle finance company into a gold finance company. We have about 1,000 branches there. With the kind of expertise that we have, the kind of trust that we have with the customers, the kind of digital ecosystems with our customer relationship management module, and the connect with which we have the customers, we are effectively poised to cross-sell to this set of customers very effectively, because the trust and the bond with the customers has already been built over years and generations together. Now to build on new product categories is a much I think effective strategy for us, and we build on that cross-sell strategy through our existing distribution network.
And what about microfinance? Third straight quarter where you've degrown that book. When does it start to grow again?
So microfinance as a sector as a whole is going through a challenging phase. I'm looking at probably 2 quarters for things to settle down. We have a very good collection efficiency in Belstar, about over 98% efficiency that we have built. I think we have a self-help group that helps us build that collection efficiency also with the connect with the customers. So over a period of time, I think right now the GNPA of our Belstar stands at only about 2.91%, and we are taking proactive steps to strengthen the collections and improve the asset quality. So I think over the next 2 quarters, things should stabilize and we should be able to grow that back.
And is a lot of your provisioning, your whatever sitting in impairment, a reason for microfinance being the reason for that?
Come again, could you just repeat your question, please?
Is a large part of the provisioning that you've done over the last couple of quarters due to microfinance, and is that expected to continue over the next 2 quarters as well? Is that the trajectory we can expect, or will it spike up, go down? How do you expect that?
Okay. As you know, we moved to the Ind AS since accounting system 2018, and we are required to make provisions as per the principles laid down in the Ind AS with the expected credit loss, ECL provisions that we have done. So the impairment has gone up because of 2 reasons. One, on account of higher level of gold loan growth that has happened during the quarter of 7,290 crores. The ECL provision on the stage 1 and stage 2 standard assets have gone up. On account of increase in stage 3 NPA assets, that's about 237 crores. So ECL provision has also gone up accordingly. And as you are aware, in gold loans, the NPA assets will not incur losses because of the collateral being gold jewelry. But being an accounting regulatory requirement, we have to consider NPA and accordingly have to make provisions. But the gold loan ECL provisions will not translate into actual losses. Hence, the same can be treated as a book entry. Once the NPA levels is reduced, ECL provisions can easily also get reversed accordingly.
Very optimistic commentary that we are seeing from Muthoot Finance. In fact, the stock is up over 6% in trade today.